Yo, what's going on, guys? It's your boy, the Young CEO, here today. Today, I'm going to be doing a market outlook and be showing you guys, what I think, where we could possibly be at in the market, right? In terms of, all markets, certain like stock markets, Bitcoin, crypto markets, and stuff like that. The last time I actually did a video was around, it was like about around 1 month ago, and I gave you guys, certain price levels that I seen crypto was going to be coming to, specifically Bitcoin, maybe Ethereum. I think I covered Ethereum. But right, right now we are definitely in, you know, if you look at the world, right, we are definitely in an uncertain time, right? It's getting, prices are going up, gas prices are going up, food is going up, Ukraine and Russia are at war. There's so much things going on in the current time frame. So, and especially with that being said, if you look at the current market, right, prices for the stocks, cryptos, at certain assets have been going down, and things like such as goods, food, housing market, right, it's prices has been rising. Like, it's been getting more expensive to buy things. The CBI data released for last month, right, was in June, and that was for the month of May. That was a whopping 8.6%. We haven't seen inflation rise this much since, I'm pretty sure, like the 1900s, right? It's been a while since we've seen inflation rise this high. Um, this is actually very, very, very important when looking at, you know, what when you're looking at what you should invest in, where you should put your money at, and what should you do during this uncertain time, right? Me personally, there's a lot of opportunity within this time, right? I'm gonna be taking as much opportunities as I can, right? But I'm not gonna be, say for example, like how Bitcoin's at 19,000 right now, right? I personally don't think that this is the bottom yet for any of our assets, right? Yes, it did hit the price structure that I was talking about. I said between 18 and 21K we should see some sort of support or some sort of, you know, price level where, there's actually price action in order for us to hold at these levels for a little bit, right? As well as the NAS 100, right? The NAS 100, the NAS 100s, the tech stocks have been actually doing a very bad nosedive as well. There's a lot of things going on, guys. Like, there's a huge semiconductor shortage that has been impacting the tech stocks and tech market for a while, especially the car market. We look at cars, right? Prices have been going up ever since they had the chip shortage, the semiconductor chip shortage, and with everything turning into, with everything, most things need semiconductors for technology, right? That's just how it is. Like, there's a lot of there's a lot of tech stocks, tech companies use semiconductors with for their technologies, right? For new technologies, and that's the era that we're living in right now, where everything is becoming technology, right? Nothing, like, there's computers. Computers are literally running warehouses. Computers are literally running this. People work that on their computers. Like, uh, Tesla, like, literally has an iPad in their car, right? Tesla's electric, right? It, like, everything is turning to electronics, right? And a lot of things need semiconductors, chips. Another thing is, right, as these inflation rates go up, the feds are trying to combat this inflation rate with raising interest rates, so that it's harder to for making it harder for consumers to actually borrow money, making it more expensive to borrow money, right? And what that would do is, as they as the feds continue to up the interest rates, right, then it becomes harder to borrow money. With that being said, it's harder for consumers and businesses, especially small businesses, to actually get a loan from the bank, right? Because it's more expensive, right? People aren't trying to pay more money to actually borrow money, right? And with that being said, the demand for things starts to go down. Now, when the Federal Reserve, right, they control the interest rates. They control how much it is to actually borrow money, right? Right now, it is very expensive to borrow money. They raised it last month by 0.75 basis points, right? So that being said, the less money being borrowed, the less things being bought, right? And that they're trying to shrink demand for certain products. So a lot of people, right? If you look at the world right now, interest rates, right? People wouldn't go since it's getting harder to borrow money. People wouldn't go to the market to actually put their money into a lot of consumers, a lot of retail investors aren't going to put their money into the market, especially if they can't. It's people have a limited amount of money. That's what I'm trying to say, right? And people aren't trying to, you know, put their money into something that can possibly be risky, such as stocks, and then even riskier cryptocurrencies, right? Going down, and every single time they up these interest rates, right, it's like we see another big drop in the market, right? Well, that's why. If I'm looking at the NASDAQ 100, right, don't mind these markups right here. If we're looking at the NASDAQ 100, right, we have came down from our highest high. We've came down around 34%, right? We're down around 34%, right? And a lot of people say, are we turning back around, right? Me personally, I think we still have a lot of room to bleed. I don't think that we're going to be going up anytime soon, at least this year. Maybe we could possibly see a difference at the end of the year, but I personally don't see anything here that could be positive for where we're at in the market, right? Especially fundamental news, not where we really want to be, right? We still have these lows to take out over here, right? We have these lows in this area. We have a lot of lows in this area, right? And if we go out to the monthly chart, right, we still have a lot of imbalances to fill up in this area right here, general area that I'm looking at. We should definitely, if you think the market's gonna go up from here, I don't think we see a good support in this area, because this right here, this created a lower low, or relative lower low, a relative low, and we should definitely see markets. I'm not saying definitely, but we could potentially see markets definitely plunge through this level, and maybe fill in these areas of imbalance in these areas over here, right? Could potentially see that, right? I think we still have a little ways to go for NAS 100 in the stock market, tech market. I can see another 18% drop, 20% drop in the stock market, right? So I'm not saying that it'll go straight down, but we could potentially see a retest back up. I mean, we kind of have already. We kind of went back up, and then we should possibly see another. I don't think we're at the bottom, guys. That's really what it is. And as the days go on, if we look at the dollar index just keeps rising, guys. It's the dollar's, it's becoming pretty strong, because it's one thing is, it as these interest rates go up, it's making the dollar more valuable, because it's making it more expensive to actually borrow the dollar. As price action, and as the charts, and as the market prints its candlesticks out, right, it's leaving a lot of clues behind. Like, for example, right here, I'm on the monthly chart, guys. We have these relative lows in the dollar index. We have this huge imbalance right here. We have these lows. We have these lows right here, guys. So maybe in the future we could definitely see there's room for the dollar to actually crash even more, right? And with that being said, we also see when the dollar does go down, we see assets classes do generally rise. If I'm looking at Bitcoin, if I'm looking at the crypto markets, right, um I had marked this out. I had marked this up for you guys last time, right? Where I told you guys that we potentially will come to either 18,000 and 21,000, right? Which we did. We did come to those areas, those possible areas, right? From all-time highs, we are down around 73%, 74% right now from the all-time high of Bitcoin, right? Now, we still have, I potentially think we still have room to drop, right? Do I think this is the bottom? I potentially, it could be, right? But I don't think it is, because we still have a lot of room to actually fall within these imbalances and fair value gaps in these areas. If you look at the previous market cycle, where Bitcoin rallied up all the way to like 19,000, right, in 2017. If you look at the previous market, if you look at the previous halving, right, previous Bitcoin cycle and crypto cycle, basically, right, from the all-time high to the lower low, we dropped around 83-84%, right, for the crypto markets, right? Now, if I'm gonna be looking at that and be going off of how much it drops in percentage, right, it kind of makes sense to where we will be going, especially because these areas are definitely an area of interest for me, for for Bitcoin to actually potentially come to. So if we're looking at this market cycle, right, this last market cycle dropped to like 84%, right? If you look at this market cycle from the higher high, from all-time highs to where I think we're going to be coming to, potentially to fill in this imbalance, right? If we go to 84%, right, we're going to be hitting that, filling in those imbalances straight up. Like, it fills in all those imbalances. It's going to take out the liquidity that it just created at that $18,000 area, right? Because these are literally equal lows right in this area, relative lows, equal lows, whatever you guys want to call them. The market likes to, when you see a double top, when you see relative highs, relative lows, equal highs, right? The market, people would, retail investors would usually believe that, oh, that's a area of resistance. Oh, that's an area of support. We shall hold at these levels, but that's not really what the market movers and what the algorithm is doing, right? So basically, as we create these equal lows, right, the market is definitely tended to, come below those lows and actually sweep that liquidity up in those areas. These ideas are just a prediction of where we think the market's going to go. It's not definite, but it's potential ideas that, I think that's generally could happen. Now, if I'm looking at Ethereum, right, I am dollar costing into Ethereum. One thing is about uncertain times like this, instead of trying to catch the bottom, instead of trying to catch a falling knife, you can dollar cost average and literally just get small positions, put X amount of money in, right, at certain positions, get your positions in there, and as the market keeps going down, right, you could just dollar cost average, which I am doing in Ethereum, right? With Ethereum, obviously it goes Bitcoin first, then it goes to altcoins, right? Ethereum has a lot of use case, right? Ethereum has more use case than Bitcoin, right? I believe that Ethereum definitely will see more money being flowed into it at some point in the future, right, than Bitcoin. Right now, let's look at the total market cap for the cryptos overall, right? Right now, where I had marked it up previously, we are seeing support levels at this area, right? We haven't broken below this area yet, but I think that it's possible for us to actually break below these areas, because these are areas of interest that I have right here. This candle are areas of interest that I have for the total market cap of crypto to actually be coming down and filling those areas in, and then we could see a potential reversal, right? But right now, the markets are still bloody. Interest rates and inflation rates are rising. I'm waiting for the next CPI data to actually be released, and from what the Feds have done with raising the interest rates, it has actually, if they haven't went in aggressively at first, I think that inflation would have still been going up at the same rate as it has been, right? Since a good gauge for inflation is basically looking at the gas prices, right? Gas prices are kind of stabilized. It hasn't really been going up, right? In my area, it's around like $5 a gallon, right? It's around $5 a gallon, and it's been staying below that $5 a gallon threshold, right? So that's one way that I've seen that it's been stabilizing. If we go to, I want to show you guys this. If we go to the Bitcoin rainbow chart, right? This is where we're at in 2022, right? Generally where we're at right now. What this is telling us, right? This is basically the rainbow chart of Bitcoin, right? Obviously, price action is going to be true to, it is going to be telling the true story, but this is kind of just like a little area, a little diagram telling you where, like, the previous market cycles, where it was like cheap to buy Bitcoin, and where it's kind of like, it's kind of like all-time highs for Bitcoin and stuff like that. So right now, where we're at in this general area, we are at the 18,000 area, right? Like I said, I believe that we could get to 15,000, between 12 and 15,000 area for Bitcoin, right? And that's massive potential sale, because we literally topped out around 70,000, 73,000 area for Bitcoin. We didn't even get up into this red area for Bitcoin. Previous market cycles, right, were in 2014. We see Bitcoin hit a whopping $1,237, right, and came all the way back down to $211, right? People who had sold their Bitcoin at $211, you guys are probably sick right now. So no, this market is very, very volatile. For you to drop from 1,200 all the way down to $211, right? That's a very volatile market to be a part of, right? Crypto is definitely it's not like the stock market where you see like 10%. You could see 20% in a day for crypto. You can see a 20% drop. You can see 50% drop in a day for crypto, right? It's happened before, right? Now with this next market cycle after the 2017, right, we started rising back up to $1,000 area. Then we've seen price shoot back up all the way to $18,000, $19,000, right? Came all the way back down, right? This is between the 2017 cycle and the 2020 cycle, right? Then after the halving, which is in this little area, which is this line right here, after the halving, we see prices skyrocket all the way to $70,000. Now we have almost 2 more years till the next halving, right? We could possibly just accumulate in these areas for the time being, and as soon as we get closer to the halving, we could see a potential rally up higher, maybe in these areas over here, right? Between the blue and the green area, we could see a potential rally up. But until then, I don't think we're gonna see a new all-time high until the next halving, because, like I said, right, it's getting harder for people to borrow money. inflation rates are going up, which means everything's are becoming more expensive. And people's first option is not to go put their money into certain assets such as stock market, Bitcoin, commodities, right? That's not their first, especially like the middle class, lower class, and if you look at it, just the entire world in general, that's not where people would actually put. That's not the first idea where they would put their money at. People have to survive, right? It's getting harder to survive. It's getting more expensive to live, and just to even feed yourself nowadays, right? That's where people are going to be putting their money into certain things like that. Now, until this inflation rate and until this inflation goes down, I don't think we're going to see a big rally in either the stock market or the crypto markets for the time being, that goods and services are becoming more expensive, right? So, I mean, my levels for NAS 100 is we have to come in and fill up E's and balances in this area, and then we can see a potential reversal. So let me mark this up for you guys right here, right? I don't know if this is possible, right? Nobody knows that if this is possible, but it's definitely a potential idea that could happen to the stock market and to NAS 100, right? This is a potential area of interest that I see us coming to for NAS 100, right? Possibly I'm on the monthly chart, right? Possibly within the next 3 months that we could potentially see the market come to this general zone. If I go to crypto, looking at the total market cap right now, we are sitting at around $849 billion in the market, right? Which is very, very, very low, right? $849 billion in a market is nothing, right? We could definitely see crypto reach the amount of money that's in banks, right? The amount of money that these institutions move around, right? The sky's the limit for crypto. If this market actually takes over that institutional banking sector, especially we have DeFi, so potential area for the total market cap of crypto, we could possibly see a area of interest at maybe the $500 billion area for crypto. $500 billion area for crypto, right? Bitcoin 12 to 15K in my opinion, right? Ethereum 500 and 750, right? That's possibly where I could see that going to, right? Now, that being said, if you guys have any questions, just post it in the comments section, and I'll make sure to reply back to you guys. Go follow my Instagram at the Young CEO, right? THYONGC30, right? Go follow it. That's where I post a lot of my trades and what I'm actually looking at. Oh, I actually wanted to say I actually been working on something very, very big, and I can't wait to actually launch it. So make sure you guys go support the Instagram, all right? Add yourselves in that Discord that's in my Instagram, to keep you guys up to date with news. Make sure you guys go like, subscribe, and turn on those post notifications, because the only way is up.